This is one of the things I wanted to talk about when it came to tax brackets, because as I was saying, Trump's plan on tax brackets effectively would separate the working class from the middle class and the middle class from the upper class. And anybody making less than 150,000 a year would be considered working class. Anybody making 150 to a million would be middle class. Anybody making less than 1.2 million a year would be considered not upper class. So, what I would suggest is figure out where the poverty line is, which is something they already do every year. Say from the poverty line and below, you don't owe anything in taxes. And then have a exponential curve that correlates to your taxable income. So like, instead of having from this amount to this amount, you owe this percent, have like, okay, as you get higher and higher, your taxable percentage gets higher and higher. Because again, it's not quite the way that I presented it before, because we do have basically our tax brackets are built where it's only over that amount that you start to pay taxes on that amount. So if it's one tax bracket for 0 to 100, another tax bracket from 100 to a million, you're being taxed at the million rate for everything you make over 100,000, not everything you make from 0 all the way to 100,000. So you're not quite hit as hard as you go from one bracket to the next. However, it still does translate to making a massive amount less as soon as you get into that next tax bracket. And I think having a bell curve where it goes up to a 90% tax rate for the top 0.01% of the country, if you have the vast majority of the country at like a 15 to 20% tax rate and the extreme wealthy people at an 80 to 90% tax rate, I think that makes a lot of sense. And then you don't have to have that graduated system because there's no tax brackets. It's just an equation. It's a very simple equation that just says, okay, this is what makes sense. If you're making this much, you can afford this much. And based on the poverty line and even the median income, like you can use the median income in that too. The 50%, like half the country is making about this much. So, okay, that's where we get our, say, 20% for what most of the country is making. And then, yeah, 15%. So 0% until you hit poverty level, graduated up to 15% by time you hit median income, and then up to, we'll say, 70% by time you get to the top 0.1%, and then up to 90% by time you get to the top 0.01%. And that would combine capital gains, that would combine income tax, all of that would be combined together. And then we would have to, because this is a massive overhaul of the entire system, we would have to make it where corporations are not treated as individuals, which is going to be difficult, but that is necessary for the system to work, because otherwise you have the billionaire class having hundreds of corporations that they own, and those corporations are being taxed as individuals, which is how they basically split up their funds enough so that they don't get all taxed at once. And they do this even for, say, they buy a boat and they're like, okay, well, I'm only going to use this boat for a certain amount of the year. Well, I'll rent it out to somebody once. And then they say it was available to rent for most of the year and it was rented out during that year. So I'm going to write off 90% of the expense of that boat and not have to pay taxes on it. So they only have to pay taxes on 10% of what that boat costs. So they're basically getting like a 20 to 30% rebate on any luxury expense they make, because they're turning it into its own LLC or S Corp or C Corp, having somebody else do it for them. So they don't even have to take the time with it. That goes for any properties they own, that goes for any luxury items they own, anything that could be potentially rented out by the people that don't have that much money. Those are the things that they're getting tax rebates on top of these nonsense art donation for charity nonsense.